Okay, testing, 1, 2, 3, testing, 1, 2, 3. The rain in Spain falls mainly on the plains. The ants in France stay mainly in your pants. Ja, guten Morgen. All right, yeah, good to have you. Welcome, everybody. There's a giant buzzing in my ear, and I'm trying to figure out what it is. Anyways, maybe it'll go away. All right, well, let's get going. Hello, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that allows you to trade Forex, energies, metals, indices, and binary options. What more could you want? This is a strategy session. We'll go over technical and fundamental analysis, and in particular, it's a Monday. We often use this time to go over things like the Commitment of Traders report, and 1 second. There's something buzzing in my ear. What would be doing that? Oh, something. So yeah, typically we go through the Commitment of Traders report here on Forex.today, and we go through the calendar for the week. And then we go through some technicals. Is there anything specific that you would like me to cover today? You are the boss, and I am a humble currency analyst and trader. Any currency pair in particular? No? Everybody good? Fine. All right. Then let's get going. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not indicative of future results. But always, please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Oh, a question about the Big Mac index. Well, that is something that I would need to prepare for. Igor says he thought it was a joke. Absolutely not. Remember, it's a ubiquitous product, the Big Mac, available globally. And it's a commoditized product, so it's very affordable. It's very cheap. You could consider it a standard unit of measurement. And the price itself is the variable. And you would think that such a product would be priced, roughly about the same. Because a Big Mac should be a Big Mac everywhere. A Big Mac is a Big Mac is a Big Mac, right? 2 all beef patty, special sauce, lettuce, cheese, pickles, onions on a sesame seed bun. What's the big deal? So the let's say all else being equal, the the only thing that would change the value of a Big Mac from in one country it's 99 cents, in another country it's $7. Well, maybe it's the currency valuation that's causing the big difference, and maybe overvaluation and undervaluation, right? So if a Big Mac, for example, is cheap in China but expensive in Japan, what accounts for the difference? And well, maybe the Chinese currency is undervalued. Okay, so it's a real thing, and it's to measure purchasing power parity. So remember, I think it was on Thursday, one of the things we discussed was the difference between RRR and PPP. So if you're interested in the Big Mac index, that's done by The Economist. So seek that out at The Economist and their website. Okay. Well, I guess we can start with some technical analysis. I have this chart open, so why don't we do this? This is Aussie dollar. You can see here that I've measured from the bottom to the top. Seems to me it's generally down. Actually, I believe I measured from this top. Yep, certainly did. What else going on here? Seems like that could be a level of resistance. And then if you look a little closer, you won't see it on this chart, but I'm sure you have it on your chart. The daily central pivot point, I think, is about here. The weekly central pivot point, I think, is about, I forget, about here. And somewhere in there, you have a psychological level of 74 even, which I think is about here. You add that up, and this whole area could be considered resistance as well, which I have marked. So just like 3-4 levels of, you know, or even 4 or 5 reasons why these levels might act as resistance. Igor says, why not from somewhere else? Because I don't know, I made it up. I can do whatever I want. That's what looked good to me. But you can measure completely different. Let's see. Where would I have done this? On this platform, let's try this one. No, I don't even have it on this one. I don't know. Why did I measure it from there? I don't know. I do all kinds of things, man. To me, it's always inevitably the same. So again, look at this chart. Can you see multiple levels of resistance? There it is. Okay. I'm short at the 50% retracement. Yesterday's low, yesterday's high. Near the daily central, under the weekly central, near the 618, near the psych level, in something that I consider, generally speaking, a downtrend. Right? So at some point, it should fall, is what I'm thinking. So, I don't know, that seemed like a good enough area to me, right? Somewhere around the psych level? How about that? You know, it's just measure it any way you want. It shouldn't matter, right? You're either a bull or a bear. In this case, you know, I'd rather be a bear. And so that's one way of looking at it. Yesterday's high to today's low. Right? I just didn't do it that way. I did it this way. I don't know. Shouldn't matter. Right? Because remember, when my computer's booting up, I already know what I'm going to do. Isn't that what we talk about? Doesn't it sound like me to say, oh, I'm going to sell right around the 50% in the direction of the prevailing trend? Right? WWWD. What would Wayne do? I mean, it's just, I don't know. I didn't need much more than that. Oh, look, the psych level. Boom. Hey, I'm at the 50%. Oh, look at the psych level. Boom. Sell it. I mean, there it is. The deep analysis, right? So now hopefully it just, oops. Oh man, don't do that. I don't know what I just did. Just moved my stop. Okay. So I'm hoping it does this. Okay. Now, you might think, well, Wayne, that looks plausible now, but was that really something that you would have planned? Well, let me open up my snag editor, and I'll tell you what I did 5 hours ago. Here it is. I'm going to have to zoom. Well, I'll move it up. So here's my trade plan. Sell the 618 between the two pivot points, psychological level. You can see when I pulled the trigger, it was still green candles. It hadn't even created a downward force. I thought it would come down to about 36.69, 73.66, right? Can you see that? Then I said it would come up a little bit and then down. Okay? Seem reasonable? Okay. Notice it's 1:53 a.m. when I did that. All right, cool. Oh, snap! That's exactly what it did. Huh. We just don't know if it'll follow through now. But I drew that when we were on this candle. Nice, huh? Take a look at it again. So now I just don't, so we were right here, right? So now I don't know if it'll follow through, but we're right here. By the way, right? 73.66. 73.66. Look at that. Cool. So where will it go? I don't know. Now here's the problem, right? New York's going to take it wherever New York wants to go. It could agree with me. It could disagree with me. I don't really know. I'd like to make money. I can't lose money. But you know, New York's going to do what it's going to do. At the end of the day, even if I make nothing on this trade, will I feel bad that I sold the Aussie dollar? No. At this point, I'm not in control anymore. I mean, so unless I throw down more money, I can't really influence what happens from here, right? But hopefully you understand the technical analysis. I let it retrace. I sold near the 74 psych level. Boom. Just happened to be a 618 Fibonacci retracement. Fine. Next. Let's take a look at euro dollar. You guys probably trade that. Okay. Zoom in here. What do you think? It flipped right on top of the daily central, just a pip and a half away from the 382 Fibonacci retracement. Do you think this is a coincidence? Okay. So just keep that in mind. This fits right into our strategy, doesn't it? Our swing trade strategy. What have I been teaching you these, you know, for years, but let's say I've covered it quite a bit in the last couple of months. You want to sell between the 382 and 618 Fibonacci retracement in the direction of the prevailing trend, right? How many people are really focusing on this now going into the London Open? Anybody? Like you're sitting down with intent. Now I will look for swing trade opportunities. Remember, without intent, you're just making it up as you go. Right? So just put it in, file it away somewhere in the gray matter. This is what would be hopefully playing out today. But it doesn't have to, but that's what the technical analysis would suggest, right? That if you shorted that retracement, you're expecting a lower low. Now, New York could take it up, and then we're done with that for a while, and we just walk away. Okay? Cool. Now, Piggy flipped as well. So you'll see, even though I think my trade was the best setup, it did the least. Damn you, Aussie! Gold dropped 5% and still couldn't get the thing to Aussie to move, right? Oh well. So there's our little piggy. That doesn't look very good. Let's put it on here. Piggy, 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 can't you see? All right, so how do you do this? Yesterday's low, yesterday's high. Okay? If you were going to sell, where would you sell? Give me the general sweet spot. What is the selling sweet spot? No. Don't give me daily central. No. I don't think I've ever said that. It doesn't hurt, but I'm trying to get you into the routine. You should be able to answer this exactly the right answer. I say 5 or 6 times every single day. You sell, in this case, sell somewhere. It should be like, you should be able to say it verbatim. Somewhere between the 382 and 618 Fibonacci retracement. I say it the same way every day. This is the 382, this is the 50%, this is the 618. That's the sell zone for the day. You say same as, no. No. It's not the same. If I say it 25 times a week, that it's somewhere between the 382 and 618 Fibonacci retracement, has nothing to do with the daily central. Now, the daily central is going to be in there because we often do this. We're looking for the low, yesterday's high, right? And then we're going to look at yesterday's close. Well, that's how the daily central is calculated. But some days, it's not going to be where you want it to be. Because if it closed here, the daily central is going to be really low, but we're still going to sell up here. But your daily central will be down here. And you'll say, well, why did it retrace so much? Okay, so it's not the same. The daily central is the high, the low, the close divided by 3. That's all the daily central is. What I'm looking at is, in a trending market, right, a 382 to 618 Fibonacci retracement. So today they're the same thing, but they're not necessarily the same thing. I'm going to harp on you with language because it's important. Cool. So if you were sitting here at your charts after the London Open and you were waiting to sell. Okay, you got me? This is what I told you. Let's say Thursday of last week, we drilled this one home. If you know what you're going to do as your computer's booting up, you're thinking, I hope I can sell the pound dollar. I hope I can sell the pound dollar. I hope I can sell this pound dollar. I hope it's somewhere between the 382 and 618 Fibonacci retracement. I hope it's somewhere between the 382 and 618 Fibonacci retracement. Then boom, right at the London Open, you're in there. I hope it turns. 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 Oh, snap, it hit the 618 exactly and then dropped. I'm going to sell the retracement. 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 I just can't wait. I can't wait. I'm going to sell the retracement. 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 Boom, I sold the retracement. Right? I mean, it's different, right? Yeah, Simon says, you hit long the first one. That's how it goes. So that means you're bullish on the pound dollar, which is fine. And you did the right thing, and the market went against you, and you probably got busted at break even. So the way it goes. Yeah. Very, very good trade. You got zero out of it. Very good trade, well managed. But again, guys, what we talked about in our last session here at Forex.today, and I might have done it at the FX Street one on Friday, that intent is what you need. Okay? Intent. Now, what I don't want to see is Simon like long and then short and then long and then short, and you're a mess. Okay? That I don't want to see. I want you to have intent where over the weekend you looked at your long-term charts, 4-hour daily, and you decided on a bias, or you used fundamental analysis and you decided on a bias. Okay? So it's Sunday and you already know what you're going to do Monday morning. Now, using a swing strategy, you also basically know the area. You just don't know the time of day in which you'll pull the trigger. Yeah, somewhere around the London Open, but we know it could be a half an hour before the London Open, or it could be 90 minutes after the London Open. We don't, but you know kind of somewhere between the 382 and 618. So if you had factor all of that in, and this came up, touched the 618 to the pip, and then significantly dropped, it seems to me that was very tradable. But if you're trying to figure it out as you go along, it's not going to be that easy. Right? Okay? Do you hear the message? Okay? If you're looking at your charts trying to figure out what to do, you're doing it wrong. Well, DeBeast says front ready on a fib level. Well, look, guys, how do you make a trade? You find the levels in which you're interested in trading. Let's say I want to buy this area, somewhere in there. Let's say that's what I wanted to do. I know the area. We're touching it now, but I have to wait for the pattern as well. It's more than just the price. Okay. So as long as it's more than just price, it's time of day, and it's a reversal pattern, then that's fine. So front running based on a fib level, look, if it gives you a reversal pattern at your fib level, then beauty, take it. Because you're not the only one making the trade. You could be the only one on the planet making the trade, but not if it gives a reversal pattern. Okay, one that I wanted to buy, and I didn't because I didn't get my price, was USD Yen. I wanted to buy it at 24. Let me zoom in. And it dropped, it was basically 24.10. Okay. So looking at the range, 382, 50%, 618. That's the buy zone for today. I wanted it down to 24. I didn't catch this. So I wanted this to come down to 24 and then I'd buy it. So I didn't get it. Close, not quite. But can you see that that's also very tradable if you wanted to? That's a 3A2 right at the top there. Okay. London Open, right? Right around the London Open. Right off the 3A2. Up. Now we're probably in a roll reversal area. Ready for the next cycle up. Right? Higher high. What do you... Old resistance becomes support. What? That's what you're interested in? Drop into a 5-minute chart. Now, I don't have moving averages on this one, but do what you may. Mike brings up a point on time of day. There are two significant times in the day for trading. One is the London Open, one is the New York Open. And actually, more and more, the Shanghai Open is also important. But really, you can't miss the London Open, you can't miss the New York Open. And Mike, your family should support your efforts. Even if it's difficult, if it's a tough time of day, they should support you. Make it as easy on you as possible. And together you shall endure. Yeah, well, Lord says good luck with that. Well, all right, I can take myself as an example. Yesterday was Sunday, right, for me. So Sunday night, since I had to go to bed super early, my 8-year-old daughter drew me a bath and threw in bath salts that smelled like lavender, and she got one of the portable, Bluetooth speakers and put on violin classical music and so on and so forth, just to make sure that I was happy and comfortable. How nice. Oh, I forgot the best part. It brought me a big can of cold beer. Very nice. So I'm very happy and very lucky to have the support of my family, even though I work very strange hours doing very odd things like buying and selling money. Yeah, no. Well, she's good. All right, so bum, 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 bum. All right, so let's just do some of the funnies then, okay? So it's the 20th of July, and the RBNZ is going to be a big one in the middle of the week. Let's do this one first. Okay, RBA. Well, we'll see what goes on with that. I don't expect a surprise. I don't think they're going to say we need to cut interest rates. I mean, they might, but I don't know. I think they do nothing. How about that? Then the MPC minutes is going to be supremely important because, well, let's go back. Maybe I shouldn't throw so much opinion in. The RBA, we may learn, may continue to lower interest rates. The meeting minutes may suggest that they're going to continue cutting interest rates. Okay, fine. MPC meeting minutes, we're going to learn about their intent for raising interest rates. Okay. And then, of course, RMB, RBNZ. And the rest is just blah, blah, blah. So it really comes down to it. Aussie and Kiwi. We're going to find out whether the trend continues. Now, the Reserve Bank of New Zealand is expected to cut interest rates again. Oh, Igor, I might have missed that. Igor says they said no. No, I did not. So thank you guys. All right. So word on the street is the RBNZ has committed to not cutting interest rates further. All right. Well, that would impact the value of the Kiwi dollar, right? Okay. And maybe that'll impact Aussie as well. We'll see. Maybe that's what's slowing up my my Aussie trade. Okay. And then the British pound, man. The British pound should be an interesting one. Okay, and everything else just won't matter as much. You know, we have intervention going on with in China, so PMI I think will be overshadowed with what's going on there now to prop up the stock market. Canadian retail sales I think could be interesting because we're worried about their economy. I wouldn't expect a good number though, right? So I think a lot of these things are a foregone conclusion. So the biggest question mark is really, the Bank of England. So it's sort of a nice trading week. Light yet important calendar. And they're spread out, so it should be nice. Should we really worry about French PMI and German PMI? No, no. I mean, just okay. So yeah. So it starts out with Aussie, then it moves to pound, then it moves to Kiwi, then it goes to CAD. Meanwhile, dollar strength all week, right? So cool. So that's that, and that's always available to you at Forex Today. Now, if you want a little broader of a calendar, just add the 2 stars, if you will, and you get all kinds of stuff. Cool, huh? Well, the beast of what I'm suggesting is those are the only things that would be likely to change the trend, if at all. Yeah, we can do some binaries and do some skip scalping or anticipate it ahead of time. Okay, so for example, when Carney speaks at the Bank of England, when Carney speaks, does he tend to talk down the economy or talk up the economy? Is he Mr. Doom and Gloom? Is he dovish or is he hawkish? Right? That kind of stuff. So why don't you make the trade now? Find something that may be weak. Right? Let's say you want to sell the Swiss franc. If it dips down, maybe you want to buy that. Jam the stop and let Carney do the work. And you're like, well, Wayne, I don't like the Swissy. Right. So get rid of the pissy and why don't you do beast? Okay. Maybe you can catch a dip down here to the monthly central pivot. If it comes down here, maybe you buy it, jam the stop, and hope Carney does the work for you. Okay? You get it? If you think Carney's going to talk the value of the pound up, then buy a dip, jam a stop, and have him talk it up. It's called creating a trade plan. If you think he's going to talk it upward, then find an opportunity to buy it. That's all. Okay. Slight increase in short positions, slight decrease in long positions. Could be the start of a beautiful trend. That's the perfect storm, isn't it? Increase in shorts, decrease in longs. It's not dramatic, but it could be the beginning of the end, right? This is the end. My only friend, the end. The trader awoke before dawn. He put his trade on. And then he walked on down the hall. And he made a cup of coffee. Okay, so here's a piggy. Decrease in shorts. decrease in longs, no change in net. Market going neutral, huh? Okay, cool. Beep, beep. Okay. Decrease in shorts, increase in longs. What? I'll never look into those highs again. So increase in shorts, no change in longs. That's good, isn't it? Increase in short positions and fairly dramatic change over the course of 2 weeks. Lots of people getting short, nobody longed it. Nobody. Whoever's long hasn't changed their position, but they certainly haven't added to it. I think that's interesting. So if this drops, then we could really get a move. But we'll see. Maybe this will change over time, but check that out, guys. Talk to me, Goose. What do you see? Nobody's shorting the Kiwi. One, right? 1, 2, 3, 4 weeks. Over the course of the month, there has been no increase in short positions on the Kiwi. When you're strange, people don't trade the Kiwi when you're strange. Don't you find that very interesting, guys? Nobody's actually shorting the Kiwi, but those who were long are dramatically getting out of that position. But nobody's shorting. It's only bulls getting out. And over, a month. So that's people probably looking for the bottom, isn't it? Now remember, I think it was last week and the week before, I was talking about building a long position in Kiwi Yen. How many people remember that? Yep. 1, 2, 3, 4, 5. Cool. Have you been preparing for that? Right on. Well, this is evidence that that could be a good strategy because nobody's selling it. Now, price is falling, as you can see, dramatically, but it's only because the bulls are getting out. But no one's selling it, which means the bulls might want to get back in if they can get the right price and the right market conditions, right? So that's interesting. And then our kitty cat. dramatic increase in shorts, and some people are buying it. Not many. Which means a lot of people are getting this wrong. Can't imagine why you'd want to buy it. The only time I would buy this would be selling it off of 30, right? But even that is sort of a desperate, hopeless act, in my opinion. Yeah. Well, remember, we were shorting the Canadian dollar a month and a half before they cut interest rates. Cool. Somebody asked for the link to the COT data. Here it is. Of course, you can just go to forex.today, hover over news, and just click COT report. Okay. Dollar index falling. Now I mentioned kitty CAD at 130, and that's basically the only thing to be doing if you're buying Canadian dollars. It'd be basically just selling that psych level. And if you're hell bent on buying Canadian dollar, that'd be about it. Cool, huh? Yeah. Nice little move here on the 5-minute. Okay, can you see that boy, how many times do I have to click that? There we go. You kind of have this move, then what? And it consolidates. Now we got the low, right? So I would look for a retracement and a sell if I was a bear. You got it? Oren says 130 has been the high for many years. Well, it's just psychological as well. It's a nice round number. What else should we be looking at? Oh, that USD yen. Nice. Double bottom, 1, 2, 3 maybe. You see it? Right, down, double bottom, higher high, higher low, higher high maybe. Excuse me. Or are you going to wait for it to make an even lower low? Well, if it's going to go up, I'd like it to do do that sooner than later. CAD yen's taking off, Kiwi yen's taking off. Pig trade, that's euro. Euro trying to make the turn. Even the bloody euro. Yes, I could do this. Good. The 618 Fibonacci retracement predicts a 1382 extension, which puts us on the monthly M2. That's euro. Now, piggy would be interesting, right? Especially if you're going to hold it through the MPC stuff. Okay. So far, I really like the USD yen. You know, it opened at the 618. It made the 382. It's done the roll reversal. It's been very kind to us today. The only downside is there's no pips in it. It's so few pips that it's almost a blink of the eye. You're like, what? I've been in this for 5 hours and it's been trending beautifully and I'm up, 18 pips. Baltic Dry Index, well over 1,000 now. Very good. It's good news for global economics. We have some trade data coming out of Canada in about 45 seconds. Well, the last time the Baltic Dry Index rallied significantly, it had to do with some stockpiling out of China. They've been buying some gold recently, but you're not going to, that wouldn't come up in the Baltic Dry Index. So I think this Canadian news coming out will be, will be nothing, but it's what we got. And by nothing, I mean that I think that'll actually be the result. But maybe it gives you your entry.
The May wholesale trade sales in Canada in just a few seconds. Canada -1% month over month versus the 0.0% expected for wholesale trade sales.
Wow, bad number. No, gold's problem is the same that it's been for several years now, and I've been very, very clear about it. There's no reason to own it. So what the world is interested in, what the world is interested in, what money is chasing, is yield. So you can earn yield in two typical ways. One, you buy a bond and it pays you a yield. Or two, you own a stock and it pays you a dividend. Okay? So that's that. There's no reason, okay? Typically, there's two reasons why you would want to own gold. That would be high inflation, right? Or a dramatic increase in risk. Typically systemic risk. Like there's nowhere else to put your money. Even the bond market's risky, so you'll buy gold. Well, we're nowhere near either of those situations. So owning gold, it would just be, well, A, risky, and B, even if you get it right, you're probably not going to make much money. I mean, there's just no real reason to own it. Yeah, I guess, if you're a diversified portfolio, maybe, but even then, I can't imagine the outlook for gold to go up. I mean, In the last 3 years, have I even once recommended buying gold? So it's just like, I don't know, it's just clear to me. It's a one-way street. Right? I recommended this seller. It was a 1382. Now, when we get to 1100, it doesn't, I'm not bullish, but it becomes supportive because people are going to defend key psychological levels. So the closer you get to 1,000, the more likely it's going to stop falling. And really what happens is the closer we get to it, like 1050, people start defending before you get to 1,000, but they're really just defending 1,000. But that's not a reason to own it, is it? To defend a psychological level? And that probably has to do with a lot of hedging strategies that might lose a lot of money if it breaks those barriers. But that's a big difference than wanting to actually own it, right? Well, so Lawrence asks a question, will someone think it's cheap? Well, you have to have a comparison if you're going to do the cheap thing. You compare to what? Okay. Is gold going to go up 10% this year? Let's say in the next 12 months, is gold going to go up 10%? What do you think? I don't know. Is the stock market likely to go up 10%? Keep in mind we have quantitative easing in places like, Japan, China. So in those places, absolutely, definitely, 100% yes. So like, why would you own gold? You're gonna be able to own much more, or you're gonna get a much higher return for your risk in like the European stock market, for example, with the ECB flooding the market with money, and it's likely to continue for a year. So gold would be expensive in terms of what you could do with your money. Okay, so gold might go up a little bit, but the stock market could double. And you're like, oh, look at me, I'm 10% in gold. And someone says, yeah, but dude, you could have been up 60% in the stock market. Plus you got a dividend. So, but you didn't lose any money. All right, so whatever, in terms of what, right? So that's one way of looking at it, is that's your real return, right? So you're up in the up 10%. Let's say at the end of a year, you've made 10% on your gold. You bought it for 1,000. It's 1,100. Fine. Okay, great. even 20%, let's say, it goes from 1,000 to 1,200. Okay, you're up 20%, you're good, right? But if the stock market is up 40% in the same period, and you subtracted the 40% from your 20%, then you're in, adjusted in, so your nominal versus real, turns out that you're actually negative, if you want to do it that way. Because a real rate, you can adjust for inflation, but you can adjust for all kinds of things. You can also adjust for your risk-free rate of return, right? Or let's say, or the return of your next best idea. So let's say you say to yourself, well, I want to do one of two things with my money. I either want to buy $1 billion worth of gold, or I want to buy $1 billion worth of DAX. Okay, and at the end of the year, you would compare them and find out if you chose gold. Well, you still should say, well, my other idea was to buy this DAX thing. And you might find that you made the wrong decision. So you, in nominal terms, you made 20%, but in real terms, you totally screwed up. And the other choice was way better. Another way of adjusting it is, if you're trying to decide whether to invest in one trader versus another, and you're doing some benchmarking, your real or your risk-adjusted analysis might say, instead of using the interest rate or the inflation level as your adjustment, you can use your minimal acceptable performance for an investment. So let's say you never make an investment unless you're sure you're going to make 25%. Like whether it's real estate or a stock or whatever you put your money into, if you don't make 25%, or if you don't, in your mind, absolutely believe, if you're disappointed you only made 25%, then you walk away. So therefore, in your analysis before you make the investment, you discount everything, saying, well, I'm going to put my money somewhere. I could put it in your Forex fund, but I could give it to this hedge fund, or I can buy some commercial real estate that's distressed, or something, right? I'll do something with my money, and my minimal acceptable performance for any investment is going to be 25%. So I'm going to discount whatever you say by that amount. Because I'm going to risk adjust for everything. Now, if your Forex fund is liquid, which it is, that reduces your risk, right? Let's say you buy distressed commercial real estate, it's not liquid, and it might actually require some reinvestment, right? So he'll have to adjust for that additional risk. He might say, well, okay, if I adjust the performance to meet my benchmark, right, on real terms, that'll reduce your numbers, but I like the fact that you're liquid, and I'll give you some breathing room on that. So maybe I'll adjust it for 15%, not 25%, and the liquidity is a benefit, right? And they're doing this to figure out where the money should go and how the money should be invested in their portfolio. So don't know how we got on that, but that's not. I guess we'll end on what, USD yen? So this is actually a plan I created with you guys today in the session. Remember, it was way up here and I said I'd missed it. And that may be around the roll reversal. We drew the purple area. It's double bottomed. It made the high. It retraced. Isn't that nice, guys? Double bottom, higher high, higher low, gone. We talk a lot about that recently. Does anyone put that down as, their favorite setup? We discussed that maybe you even focus exclusively on a pattern like that, right? And that's the only thing you trade for 6 months. Double bottoms with 1, 2, 3s. Oh yeah, Igor, pip-wise it's nothing, but the pattern is valid. So you had a question about a binary option. Okay, do you have a specific question? Talk to me, Goose. Was it you, Jordy? Igor likes London swing? Nice. I thought you tried it your first day and you made 6 bad trades. I guess, like I said, if you take the same idea and you just throw down a bunch of trades, you can be wrong once and lose on every single trade. And that's not the right way to trade, is it? All right, so Suji, is it? Can we have some fundamental analysis due to the, well, if they're talking up if they are admitting publicly, and I haven't read the statement, so I need to do some more work, but if the Prime Minister or more importantly, the RBNZ, if they are, it's called verbal intervention. If they're talking about no longer cutting interest rates, then that's a change in policy that would be bullish for the Kiwi, and that's it. There's nothing else to talk about. If the Central Bank of New Zealand, the Reserve Bank of New Zealand, says publicly, officially, that they no longer want to cut interest rates, then that's the end of that trend. Okay? So you go from bearish to neutral. All right, so who was it? Who asked for the binaries? What is it that you want me to do with the binary? And by the way, Suji, I am black and white that way. Just on a dime, I will just go from bearish to bullish to neutral, whatever. So hello, I'm going to ask one more time. Whoever asked for a binary option, tell me what you want to do or what you need to know. I think it was Jordy, right? Commander Jordy? Jordy? Jordy Jimmy? Going once. Going twice. Well, he's not here. Why should I do it? How about this? Bum 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 bum. So what do you want to do? Well, see, the problem with the binary at this time of day is you won't be around to see if I make, if it wins or not. But in about 10.5 minutes, this binary will expire. We're near psych level. So you throw down a put right below the psych level. I don't know. I don't know how that works. Question is, who's the seller of the option? Not sure. But like in a cash trade, I don't know who's got the other side. So I don't know. Really don't know. But imagine, if there's no one on the other side of the trade, it's not going to be executed, right? So I don't know if they just put puts and calls together, offset each other. So I don't know if we're going to get a decent enough trade here. And it expires, is that right, in 9 minutes? It could be, Lawrence, could be. Could be a rabbit, could be. I mean, the way I look at it is not technically. I don't necessarily look at it technically. The Fed is very likely to raise interest rates soon, if not September, then definitely December. Done. So we know that. We're pricing that in. We learned that last week. We also learned last week that the Bank of Canada cut interest rates. So it's going up. So is it a ascending channel? Sure. Whatever. If that makes you buy the dips, then yes. But of course, like I said, we've been on this thing for 2 months. And they just started cutting interest rates last week, so. So I'm looking at this, guys, 92, right? We're not quite high enough. We're running out of time. And even then, now, then the option is for 9:15. So I can't even stay to the end to show you if I'm right or not. So why don't you ask me tomorrow, early on in the session, if I could cover binary options, and I'd be happy to, and we can make a few trades. How about that? Do you want me to cover binary options tomorrow? I'd be happy to do that. It'd be my pleasure. Ask me early in the session. Today, you know, we got to do a lot of things like the calendar and the COT and stuff. So, good question, just way too late. Yeah, I have no problem. Yeah, we'll throw down some trades. I think about 4 months ago, I did a whole session on binary options, and I made 6 trades, and all 6 were profitable. Yeah, it's on YouTube. Yeah, happy to. So again, just ask me, and it's yours. Anything for you, boss. Cool. I'm looking forward to it already. So let me say, peace on earth. May the pips be with you. May your profits be above average. Thank you for being a client of TradersWay. I'd like to thank Forex.today for hosting this webinar. I will take the recording. I will upload it to YouTube. Feel free to watch it. And please leave a comment. Would you do that for me? At least leave a comment on yesterday's video, which I guess is Thursday's because Friday's was at FX Street, but I don't know. What time is it? It's 8:55 in the morning. I'm on New York time. Boom, ba boom, ba bum, ba ba bum, ba ba bum, bum, ba bum, ba bum. Master of traders, pulling strings, yeah. So anyway, peace on earth. May the pips be with you. May your profits be above average. Cheers. See you tomorrow.